Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that on the surface might seem as exciting as watching paint dry, but stick with me, because hidden inside are clues about where this company is really heading. We're decoding the senior debt portfolios if you appreciate getting straight insights from corporate documents. Make sure to subscribe for more of these deep dives that get straight to the point. We also have a Discord community linked in the description below for more conversation. Let's kick off with what this report actually is. This is a semi-annual report. Think of it like a checkup for the senior debt portfolio, and it covers what's been happening from November of last year to April of this year. So think of it as a halfway point in the fiscal year for anyone following the company. All right, let's jump into those costs. The report states that the cost paid as a percentage of a $10,000 investment is 1.84%. Think of that like paying almost $200 of every $10,000 you put towards investing in the fund. What this means is that number could be a lot higher if the fund wasn't doing well, since this cost is annualized. Now, how big are we talking for senior debt portfolio? Well, total net assets are over $5 billion, which is no small thing. They're also holding 677 different things in their portfolio, and they have an annual portfolio turnover rate of 17%, but that really doesn't mean much for investors or normal people. Where did the portfolio invest? Over 88% of the fund's assets are in senior floating rate loans. In simple terms, think of these loans as debt that big companies need to borrow money, like a giant mortgage. The next highest category, corporate bonds, makes up an additional 7.5% of the portfolio, and all the rest add up to be very minuscule. Next, we have ratings. Just over 60% of the debt held by the fund is rated B. That means they are holding junk bonds and are a gamble on how that goes. The other major rating is BB, which clocks in at a bit over 24%. Those investments are doing all right, even if not the best, and for anyone who's familiar with ratings, BBB or above is considered an investment grade quality. Now let's deep dive into the financial investment table. The table shows the exact investments held by the portfolio, the principal amount in thousands emitted, and their value. It's a detailed snapshot of where their money is parked. Let's check asset-backed securities. See that the AMMCC collateralizer, that is a collateralized loan obligation at 15, which has a specific interest rate and maturity date. The thing here is to realize that they have almost 2.5 million sunk in this debt bond, ACTI moving on to an equity hold. They are also holding Monotronics International Inc. with a value of about $3 million. It's a commercial services and supplies stock. Lastly, corporate bonds. Gold Holdco LLC is also being held at a $2.4 million principal amount and a 6.75% interest rate for the buyer. In the report, forward foreign currency exchange contracts are also mentioned, which can get complicated quick. Simply put, in this case, it seems to just involve currency exchanges and appreciation for some contracts and depreciations for others. What did they earn in the period? They earned about $305 million investment income. A great increase from this comes from interest income in the quarter. That makes up almost $300 million of the $305 invested. Seems like their strategy of being a lender, after taking accounting expenses and interest into consideration, their net investment income totals to $250 million. After taking accounting expenses and interest into consideration, their net investment income totals to $250 million. In this document, we have a category known as realized and unrealized gain. This is the gain broken down into two parts as follows. The first part is net realized gain, which is the actual profits earned from selling investments and converting currency. In the report, this is listed to be at about 7.7 million investments. So when you combine both, it leads to a loss of 18.8 million. So when you combine both, it leads to a loss of 817 million. Accession and converting currency. In the report, this is listed to be at about 77 million. The second part is the net change in unrealized appreciation, which is about 18.8 million. So when you combine both, it leads to a loss of at a 181 million. The big question, how much bigger or smaller did the company become? The report has something called increase decrease in net assets from operations, which shows 69 million being added this semi-annual period as a company. Not bad. We then scroll down to find capital transactions such as contributions, which is over 528 million. But then it's balanced by withdrawals at a loss of over 790 million. That makes a net decrease of a bit over 2060 million Cleo. This makes a net decrease in assets of 19.2 million. That makes a net decrease of a bit over 2060 million Cleo. This makes a net decrease of a bit over 2060 million. Alright, time for ratios. Don't let these words scare you. Let's break it down to the big one everyone cares about. Net investment income ratio, 8.34%. What that means is for every dollar of assets, they are only making a little over 8 cents per dollar. They also show in this section that portfolio turnover is 17%, which simply means that they didn't really invest in much new things this period. The big point is to see that this percentage will be higher when stuff is moving quickly, which signals larger volatility in both directions. I can talk about this section for a bit about the company, and one thing I can say is, wow, they have a ton of senior floating rate loans under their name. I wonder if this is a good approach compared to other things they can invest in as well. It seems that they are super concentrated. This fund carries some potential upside if their investments pay off in interest ed. There are, however, risks, for if a majority of those companies fail, they would lose a lot of money. On the other hand, it seems that the company likes those odds. What about you, Coined? Alright, that's our quick overview of this filing. I hope that all made sense. If you want to learn more on how to decode finance, subscribe so that I can make bread also, and leave a comment about some other company documents I should review. Don't forget to check out join our Discord in the description. Thanks for watching, and I will see you next time.